Good morning, and today we are going to look at Colgate, where we have two brokerage firms who have given an outperforming stance in the company. Obviously, firstly, I'll start with JP Morgan. Now, they have maintained their outperformance stance with a target price of around 1,600 rupees per share. And obviously, this is on the back of the Q2FY21 earnings, where we've seen a record high EBITDA margin, which is overall driving the earnings of the company, and the earnings have been a beat compared to the street expectations overall. So that is led, especially the pricing-led revenue growth is also something they are seeing as a positive, and the significant beat on the earnings and the margin front is what they believe is continuing to, they are maintaining the stance looking at this strong performance. Moving on to CLSA. Now, CLSA has upgraded the stock from an underperform to an outperform stance with a target price for Colgate at 1,525 rupees per share. Now, obviously, the Q2 earnings, again, what is the margins which have been a beat, that is something that is, attracting CLSA and, to upgrade the stock from an underperform to an outperform. Other than that, obviously, they believe that the near-term respite from the natural competitive intensity, as well as, they believe there could be market share stability for Colgate, which will drive the growth going forward. Now, looking at the margins, they believe that, the margin benefit is expected to sustain over a medium term. So, this good margin, maybe we could see some of this could be sustaining over the medium term. And just to give you our perspective, this time in Q2, margins have been at 31.8% versus 26.4%. On a year-on-year basis, that's a 540 basis point expansion. So a very, very good expansion we're seeing in margins, obviously led by the lower ad spends as well as the cost optimization by the company. That is what has driven the margins this time, and the strong margins. So CLSA is saying that this could be sustained over the medium term. Now, looking at all this and overall the earnings of the company, they have raised their earning expectations by 3 to 4% for Colgate over a period of FY21 and FY22. So a very positive coming in over for Colgate after a good set of numbers. Two brokerage firms with giving an outperformance stance. And both of them have something in common, that the margins are a beat, and the margins were so strong that that has really attracted people, and they are maintaining their outperformance stance, seeing margins. So let's keep an eye out on how Colgate actually performs going ahead as well. What is the margin sustainability and how the stock performance is actually in trade going forward. Yesterday post the earnings, we had seen the market was a bit weak, so the stock was not performing that well, but overall the earnings have been quite good. It's a beat on the expectations, and we're surely going to keep an eye out overall on the stock performance of the company as well.